What's up, everyone? It's Caddy with Money Vesting. So in this video, I wanted to talk a little bit about how strong the market sentiment has been over the last month and a half, right? So February 16th, we are pretty much done with 34 trading days, or a little over a month and a half is done and in the books. And so far, the markets are green very nicely. The Nasdaq is up double digits. A lot of individual stocks are higher. And ideally, this right here, this data alone should be enough to tell you a little bit about how strong the sentiment is, despite all the economic reports coming out. And even if I show you this chart right here, this should be fairly enough to better understand, okay, the sentiment is very strong. Everything has been rallying. Tesla's up 64%. We got Amazon up, Google, Meta, Nvidia is up 50%. These are year-to-date gains. We got Apple up 18%, Microsoft's up 9.3%. So a lot of technology and big tech really seeing a lot of momentum, except for utilities and healthcare and consumer defensives. They are struggling. Energy is somewhat struggling at the start of this year. Financials are higher. Software, semiconductors, information tech, comm services, cyclicals, materials, industrial real estate, they're all pushing higher pretty substantially. And even if I show you this chart right here, it'll tell you a little bit about, how there is a lot of sentiment that's towards the greed and extreme greed. We were obviously in the extreme greed section not too long ago. We've pulled back a little bit from those levels. Now the markets here, in terms of the Nasdaq and the S&P 500, very elevated from its October and from its January lows. So from its January, October levels, Nasdaq's up a little bit over 16%. From its October levels, we have pushed up over 14.8, almost 15%, and the S&P 500 almost, in a very similar camp. When from its October lows, it is up a little bit over 14, almost 15%. Now, one of the things that's actually really interesting about the markets is that I wanted to calculate the green candles versus red candles, right? That is what I really wanted to understand about the markets to really help us quantify the sentiment that we're really seeing in the stock market right now. So if I go over to the daily chart, what I really wanted to do with this data is to better understand, okay, how many days in 2022 did we actually see a red candle? Not a red day, a red candle. There's a difference, right? The difference is if you come over here and click on this chart, and one of the things that I've actually unchecked for those of you who have been part of the channel for a long time is colors based on the previous close is unchecked for me, right? If I check this box, you'll notice that a lot of candles may turn green, may turn red. So you can see that difference, very subtle difference happening over here. And the reason I keep that unchecked is because I already know whether the day is up or down. What I'm interested in is price action. And the price action meaning that whether the candle itself was a green or a red candle. So I don't want the values to be calculated based on the previous closing price, but instead I want the value or the color of the candle being calculated based on the open price of that day. So there's a very significant difference, subtle yet very powerful. It helps us understand the overall sentiment, the price action behind the market. So oftentimes you may find that the market was down, right? Market was down, meaning there was a red day, but it can still have a green candle, meaning buyers stepped in on that day. It gives us a little bit more insight into the sentiment of the market, right? So oftentimes, if you guys watch my videos, oftentimes I mention, hey, red candle on a green day, but a green candle on a red day. I often mention these things to help us better understand how the sentiment was on that day. So what I wanted to do was I really wanted to understand for 2022 and so far in 2023, how different of a sentiment are we seeing in the market. So what I did was I pretty much exported all this data, put it in a spreadsheet, and then calculated the open to close red days, open to close green days for both 2022 and 2023, and then for the entirety of 2022 and the red days that we all saw in 2022 as well. And this is what I came up with. So in the first 34 days of 2022, this is open to close red, meaning that once the price is open and the markets sold off intraday, regardless of whether it was a green or a red day, the markets simply sold off in that day from open to close. So it was a red candle, right? It was a red candle day. In the first 34 days of 2022, we saw that happen 53% of the time. So in other words, from January 1st to February 16th, 2022, in the first 34 days, over half the times we saw the market sell off right after they opened, right? So pretty much that was a red candle day. Compare that to 2023, 34% of the times. So a significant pullback, significantly lower amount of red candles in 2023. To put it in another way, 34 days, 17 days out of those 34, or I think this is a little bit more than 17 because of that rounding error here. 17 days out of 34 in the first 34 days in 2022, we saw red candles. In 2023, only 11. Only 11 red candles so far in 2023. Now, when it comes to saying it another way, first 34 days open to close green candles, meaning the buyers stepped in, and we saw lots of sentiment, right? So a lot of dip buyers, lots of people stepping in to buy stocks, and the candle itself closed at a much higher price than where it opened. In 2022, only 46% of the time, so less than half of the times, buyers, took a bite and pretty much saw bids coming in and candles to push higher. In 2023, 65% of the times. Vast difference, right? Significant difference in this data point. Just goes to show how strong this sentiment really has been in 2023 when, if you compare that to 2022, same time, same first month and a half, same days, right? So we're also factoring in for seasonality and whatnot. 47% of the times, buyers stepped in and we saw green candles, versus in 2023, 65% of the times. That just goes to show how strong this sentiment really is, right? This is quantified data. It shows us how strong the momentum is. Every time we see a red candle, every time we see a red on the screen, buyers are pretty much very quick to putting in bids and kind of pushing this market back higher. Even today, markets were gapping down, and at one point we were green on the day, right? We were very flat and it was a green candle, right? So if you come over to the today's candle, this is S&P 500. At one point, this was a green candle, right? Because if you take a look at this candle over here, this is where we opened, right? This is the top of that body. And take a look at this wick. We were at 41.36. So this entire move over here, let me just do it another way. Let me just go ahead and mark this out over here. This is where we opened, right? 41.14. So this was the opening price. And this is where we were at one point during the day, right? So if I turn that into green, this was the candle at one point during the day. This right here was how it was looking like, but the sellers stepped in to bring us all the way down here at 4,090. So had we closed at around 41.36, which was the high for the day, we would have still had a red day, right? We would still be lower than yesterday's close, but it would still be a green candle, right? That means the sentiment would have been very strong. But today was a little bit different. We did have sellers step in to bring us back down, but at one point we were extremely bullish and we were strong with the sentiment. So the bottom line is, and the point of this video really is, and again, just quickly going over 2022 as a whole, and in 2022, the open to close red candles we saw were 132 out of 251. So if you do the math there, 132 divided by 251, 52.5%. So in other words, more than half times you pretty much saw intraday selling for the markets. And now you may ask yourself that if 52.5% were red candles and the other half was green, why was the market not break even? Why was the market still down 20% in 2022? Well, because the red days were more brutal and more severe than the green days that we had in 2022. The green days might have been 0.5% or 30 basis points. The red days were 4%, 3% down. So that was a big discrepancy in the percentage losses, but the sentiment was obviously super bearish and very brutal in 2022 versus compared to 2023, where the script has completely changed. And this is what we talk about when we talk about, reading the tape, right? Being able to trade the tape, and the tape is very strong. The sentiment is extremely bullish at the moment. Now, is that going to be the case forever? Is that what's going to happen rest of 2023? We don't know, but we're definitely off to a very, very good start when it comes to the overall tape itself, and it comes to the overall trend and how we're making higher highs and higher lows. And every single time you'll notice that every time we kind of gap down a little bit, we see buyers stepping in, right? So we just can't see a very consistent sell-off. I mean, we did see that towards the end of December. Obviously, the markets continue to sell off, and that was a down 8% pullback here. But in entirety of 2023, we haven't really seen anything more brutal than a 1.5% sell-off in the markets. So, and then another few things that I want to go over that kind of quantify this sentiment and kind of lead us to believe that this rally very much is driven more on the euphoric sentiment and the technicalities that we're seeing is the put call ratio, right? Trading a little bit under 0.89. So that means there's more call options open versus put options. At one point, this number was at over 2.2. Almost at 2.2, which is pretty substantial. Lots of put options open versus call option. There was a lot of hedges, so lots of those have been closed out, and there's a more biased, sort of thesis around call options right now. Short squeezes, obviously getting squeezed a little bit. A lot of individual stocks pushing higher, and then when you compare some of these charts over here, which is pretty much going to tell us about the percentage of stocks trading above or below their certain moving averages. Once again, we have seen these levels back to where we were from August of 22, or even some of these levels from before the pandemic, when this number used to be at 70 to 75%. So for example, percentage of stocks trading above their 50-day moving averages, almost at 70% right now. So the bottom line is, what I'm trying to say in this video is, look, what I'm personally doing in this market is literally nothing. Just holding on to my long-term investments and at the same time selling call options against them if there's opportunities to collect the premiums. And that's going to act as a hedge for if and when we do see that potential pullback. Because this is an environment where long opportunities are unfavorable from a risk-reward standpoint, but short opportunities are also unfavorable because of the stronger sentiment. Every dip gets bought up, so shorts are getting squeezed, shorts are getting burned. But on the long side, you just don't have that risk-reward trade-off that you would find in a very favorable trade setup. So it is a little bit more of an uncertain environment. You're kind of balancing that fine line between both the bulls and the bears. They're battling every single day for that sentiment. So unfortunately, we don't have a very clear direction. And as I said, on the long side, the move has already happened so much. The risk rewards are not that great. But on the short side, risk rewards are great, but the sentiment is not that super awesome, right? Because you're already seeing lots of buyers stepping in every single red day that we get. So it is a little bit of an uncertain environment from a technical, from a more market standpoint, from a price action standpoint, I should say. So the only thing that we can do right now is, I think, for us to just simply wait, see how the markets kind of shake out here. In the meantime, just holding on to my longer term investments personally, and then selling calls against them. And then at the same time, maybe trading options or swing trading and taking day trades if there's volatility intraday. But let me know your thoughts on this data that I really wanted to share with all of you. And the sentiment, no doubt, has been very, very strong in the entirety of 2023. And that, I think, goes to show how much of a bullish market that we're dealing with over here. And even some of the worst news, the bad news that has been coming out lately has not been priced in appropriately. Because if this was 2022 and PPI numbers came in as hot as they did and missed on all 6 accounts, the markets would have been down 3 to 4%. Let's just be honest with ourselves. I mean, the markets would have been down, a lot, but instead they're only down like 1%, 1.5%. And that just goes to show how strong, sentiment really is. So as always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.